Introducing our new series of intimate in-person trading conferences in some of the greatest cities in America. It's Market Rebellion Live. Next up, this June in Sonoma County, California. Savor some of the finest wines in America while you level up your trading with Pete Najarian, Jon Najarian, AJ Monty, Ryan Mastro, and Bill Johnson. Sonoma is limited to just 25 seats to ensure every guest gets personal attention, so act now. Tickets are going fast.
Finally got the clapper back, Mark. A new one. My wife keeps hiding all the old ones. I don't know what the story is with that. She doesn't like them just laying around the house, I guess, which, you know, it's her house, I guess. But folks, welcome to the Rebel's Edge. I am Jon Najarian. He is the one and only Marc LoPresti. You see him on CNBC, you see him on Fox, you see him or you hear him on Sirius XM on his radio show, his weekly radio show. And we are lucky enough to have him join us here on Rebel's Edge today, episode 112, Jared.
Wow. That is unbelievable, John. And as always, it's my great pleasure to address the incredible Rebel Nation independent trader audience navigating their own financial future. I love it, and I look forward to bringing them another hard-hitting Rebel's Edge episode. Let's get it.
Let's get it. All right, let's start off with Macro Minute, because I know this plays right into where you are, Mark. And I know your picks in the sector for this, but how many more balloons are we going to have to shoot down?
Yeah.
I guess we're up to 4 now between us and Canada.
Yeah, we're approaching that song from the 80s, 99 red balloons. Maybe it should have been called 99 Chinese balloons. My favorite, though, is Chairman Xi, of course, this morning gaslighting the United States and basically saying, no, you put more balloons over China than we put. It's totally you guys. Unbelievable schoolyard crap, but not surprising out of this Chinese administration, in my humble opinion.
Yeah, there was a great one. I might have to run it tomorrow, Jared, of the Chinese all looking up in the air like this. And it said the U.S. is flying balloons over China, and it's a big Budweiser blimp.
It might have been a Super Bowl ad.
It might have been.
Look, how does this all translate, though, into, news that our viewers can use from an investment perspective? I've been talking a lot about being bullish on the defense sector, Raytheon, General Dynamics, companies like that. We think, unfortunately, these tensions are going to continue to ramp up. We're low on bullets thanks to our support of the Ukraine, so we're bullish on the defense sector. That's the Macro Minute.
Yep. Well, I think that's all we give to the macro is 1 minute, folks.
That's right.
Because you really can't make a lot of money off of macro, but you can off of individual stocks, like Mark just mentioned, some of the defense contractors and things like that. So now we're into the portion of the show where we talk about big stories in the news. And Zillow is one of those, Mark, because obviously with rates jumping dramatically, more than doubling in the last year for mortgage rates, Zillow, one of the big sites that people shop on looking for homes and so forth, they were pretty much battered because of that. There wasn't enough inventory, and the inventory that there was, not as many people could afford. We can all kind of figure what goes from there, but they had basically a pretty strong run in January where they were up over 33%, Mark.
Yeah, I mean, can we attribute that, John, to anything other than folks taking advantage of that temporary reprieve from this rising rate environment and refining mortgages? A lot of smart homeowners did that knowing that was short-lived. But look, I know ISI Evercore, there's just some really smart analysts that came out this morning changing their rating on the stock, which caused it to move in the pre. But I'm not entirely sure what this housing rebound is that they're talking about or when that's going to happen. We still have excess supply. We still have prices way above where they should be. There's a lot of froth, in my humble opinion, that needs to come off the top of the housing latte before we can start to dance in the streets about names like Zillow. So I'm a little bit dubious about this call from Evercore ISI this morning.
Yeah, I would have liked it more in December, Mark,
Yeah.
when before the big 33% run up. But we'll see. Time will tell. All
That's
right.
right.
How about Fidelity? This one, FIS, making a big move today, a big move to the downside. They beat on the earnings for this quarter, but their guidance going forward, pretty bearish. And they're going to spin off one of their merchant services divisions. And Mark, I can't believe that they paid this much for that company, but $43 billion they paid for the acquisition of Worldpay in 2019. And now they're just going to off it.
Well, John, you know, that acquisition was made in what was the start of a feverish run-up in M&A activity in merchant payment, merchant services, buy now, pay later. It was that zeal for companies like this that led companies like Affirm to be some of the first 60 billion plus valuation unicorns. That company, of course, out of Sweden. We've seen that come way off on a combination of realization of overpayment and paying these ridiculous sort of Silicon Valley VC double unicorn valuations for these companies, along with reduced consumer demand as a consequence of inflation. I'm a little bit surprised that the street did not like this spinoff as much, because analysts had actually been calling for it for several months now. So this is a situation where the management gives the street what it was looking for, but I think it was a quarter or two too late, and they still overpaid for that acquisition for Worldpay.
Yeah, I'll be surprised, Mark, if they get more than half of what they paid for it. I think they probably have a very, very significant write-off coming. But the new CEO, I think she's doing the right thing. She said, hey, look, I didn't make this purchase.
Right.
My predecessors did. I don't want to be saddled with this thing. So she is basically saying adios to that. Yeah. All right. What about this, Mark? So you and I, we were talking on Revolution Radio about some of the things that have happened in crypto lately. In particular, Kraken got cracked down on, basically saying, hey, no more staking. Coinbase has already pushed back, saying that they'll go to court if they have to about that. But nonetheless, the lack of staking, meaning, you know, leaving your coins on an exchange to earn more upside or, you know, payments and so forth, that has cryptos upside down, and it also has Coinbase down better than 5%.
Yeah, that's right. And of course, the Kraken settlement, John, that case was brought by the SEC, not about their staking activities, but about the sale of an unregistered security through the Kraken token. What the SEC did, which has become part of their standard operating crypto procedure lately, as they regulate through enforcement rather than the issuance of guidance, which is greatly frustrating to everyone in the crypto business, is to say, you know, we got you for this, like the speeding ticket. The cop pulls you over and says, you know, you were speeding, but you've also got a busted taillight. Well, this was the busted taillight in Kraken's chassis. And it was a way for the SEC to send a message, a clear message across the crypto industry that staking is not something that the SEC likes. And, you know, John, we've talked about this for the better part of a year and a half, that we thought that staking, because it looks a little bit too much like banking activity, a certificate of deposit, that was going to be one of the first that the regulators were going to get around to cracking down on. And sure enough, it's playing out, and crypto names like Coinbase paying the price.
Yep, absolutely. And one of the issues here too, Mark, was Pete and I think perhaps you and I earlier in the year, because this stock had doubled, folks. It went from $37 to over $81 a share year to date. And now it has sold all the way back down into the 50s. I'm not going to say we were soothsayers, but we did have a lot of put activity in the name. And my gosh, we said, hey, you know, if you get a 100% return on a crypto, even though crypto really just kind of stabilized and moved from beginning of the year, let's say 18,000 or whatever, Mark, to 24,000, and now it's pushed back down. That doesn't justify a doubling of Coinbase, in my opinion. And we were saying, take the money and run.
Yeah,
If you had some of that, time to cash that check.
There's no doubt Coinbase benefited from a flight to quality that happened after the FTX debacle unfolded right around Thanksgiving of last year and into the holidays. But that was not to be forever, particularly against the backdrop of looming increased enforcement by the SEC and other agencies on the back of SBF's spectacular rise and fall.
Very true. All right. Well, how about Teradata, TDC? This one like a multi-cloud sort of play, and Teradata having one of the best days of anybody in the top 500 or top 1,000. This one's up 11% very quickly after the opening mark. Better than expected quarterly earnings. They were expected to earn 31. They did 35. The stock looked very strong. And, it's nice to see a data management company, cloud or otherwise, seeing this sort of surge.
Yeah, listen, we talk about this a lot. Regular viewers to this show or listeners to Bulls, Bears, and Blockchain or any of the other programming that John and Pete and I do, you're probably tired of hearing us say the data matters. Do not be short data infrastructure. Data and the data industry is not subject to the same slings and arrows of recession and interest rates and inflation and all this jazz. This is a great indication, a smaller cap name demonstrating what the value is in data infrastructure. I think still cheap, relatively cheap at these levels. I'm a data bull. I'm a data industry bull. I'm a data infrastructure bull. And I'm a Teradata bull. I like this name, even after the surge.
Yep, I do too. And I would not be dumping it. But, going from basically, 30, 31 to 38, that's a nice move. But I agree with Mark. This is not really one that I would want to get short. You could, if you're somebody like Mark and I, you could decide, you know what, I'm going to let a whole bunch of at-the-money calls go because maybe we just kind of gather ourselves for a bit with the stock rather than just continuing on that meteoric sort of move that it's making today. Now better than 13%, Mark, at mid-session.
Nothing wrong with taking profits, folks. We're not saying don't take profits. Nothing wrong with taking profits, but certainly maintaining a fairly bullish outlook on this name.
Absolutely. All right. My unusual today, Mark, is going to be a February trade, which means, folks, that this expires Friday of this week. It expires on the 17th, which is this coming Friday. So you don't have a lot of time. I always like to emphasize that because this is one of those deep end of the pools. We're not trying to, make it seem like we're so much smarter than everybody else, but rapid time decay can really work against you as an investor. So if you've never traded an option or a spread, this might not be the one to jump into. On the other hand, if you're somebody who has done that, has traded spreads as well as calls and puts frequently, then you kind of understand that double-edged sword of the final week of an option's life can be beneficial to you as well, because really it's almost a binary bet, something or almost nothing. The fact that they're buying 21,000 calls, that's 2.1 million share equivalent in Carnival Cruise Line. That's a big trade. So we like following that. They were at the 12 strike, which means just above where the stock was trading. It was like $11.30. So doesn't take much of a move to the upside for this thing to pop and for these options to go from maybe 10 cents or 14 cents, which means $10 or $14 since every option is for 100 shares. That gives you a great opportunity. And if it goes away and you bought 10 of these to simulate 1,000 shares, you're down $140 because that's all it would be. It's $14 an option, 10 of them $140. On the other hand, if this thing pops through 12 and goes higher, you could have a real strong winner on your hands. And that's what I'm playing for, Mark.
Well, I've got a similar trade, John, the unusual showing some bullish call activity in X, not the X-Men. That, of course, is U.S. Steel or Rebel Extra. That's U.S. Steel. We're seeing bullish call buying 4,500 of the Feb 30/50 calls bought for around 10 cents over open interest with the stock around $28.12. U.S. Steel, of course, announcing a $50 per roll of steel increase in stock prices. A lot of other steelmaking companies doing similar things in the previous days. This, I think, in anticipation of increased demand, industrial manufacturing coming back online, China reopening, things of that nature, perhaps the recession and inflation picture in the United States cooling, good global macro indications for the economy, good for U.S. Steel. I like this trade.
Yep. U.S. Steel, folks, is one of those that's really MT Mittal and U.S. Steel that are the real biggies here in the space. There are a lot of peripheral trades that you can do really well in, but when somebody puts down, 450,000 share equivalent like they just did in Marc's U.S. Steel, worth paying attention to, especially for such a cheap shot. All right. Well, Marc, it was the Super Bowl yesterday. I will say that I was not as impressed with the commercials as I usually am. Usually that's a highlight. I thought that it was a pretty bad batch of commercials, not a lot of creativity. Certainly, I don't think, the Mad Men would have been happy about this if they had been doing commercials back in those days, because they would have had a lot more interesting commercials. Maybe the most interesting was that Tubi commercial, which is another one of those streaming services. And they made it seem like somebody sat on the remote or something, because all of a sudden your screen went blank and then it went to a Tubi on the screen as if you were shuffling through.
Yeah, my 10-year-old nephew almost got defenestrated because my brother-in-law thought that it was him that sat on the remote or something until we realized what was going on. That was almost as painful as John Travolta reprising Grease in a T-Mobile ad. WTF was that, John? That was painful to watch. Painful.
Yeah, it was. And, I knew it was coming at some point, Marc, because I'd read about it. And it said, oh, it's his tribute to Olivia Newton-John or whatever. I don't think that was the tribute.
No.
But T-Mobile did, a different T-Mobile one, Marc, was interesting. And that was Bradley Cooper and his mom. Just because she seems so real, and he's obviously an excellent actor, and, he can play that part. Being his mom's son. But it was just kind of interesting. He's trying to walk her through learning her lines and all that kind of stuff. And they just kept, hammering you with T-Mobile. So it might have been effective, but there wasn't nearly the creativity that we've seen in the past, in my opinion.
Listen, I'm just going to come out and say it, John. I miss Larry David.
Yeah.
I don't care what commercial they could have put him in, but that commercial, I won't say the name of the company that he was doing that commercial for, but that commercial that he did last year was absolutely side-splitting. It was one of the highlights of the game for me. And it seemed like this year, the methodology from the guys in the ad industry is just get the biggest name we can and just have them on the screen. Don't worry about whether or not the content, the commercial, anything, or the message is good. Let's just get big names, put them up for 15 seconds, pay them a boatload of money, and hope the formula works. But it didn't, just like the formula for a certain team from Philadelphia didn't work against the backdrop of an injured yet still dominating Patrick Mahomes with that incredible, which almost became a Super Bowl record, John, right?
Yep.
Punt return touchdown would have been the first in Super Bowl history.
Well, Patrick obviously is one of the biggest stars on any stage. Obviously, in the NFL, he is really above and beyond. To have 2 Super Bowl MVPs and 2 Super Bowl victories, my hat's off to him. I love the guy. And I thought he was the only reason, Marc, that the spread was only 1.5 for Philly, because Philly has strong offensive line. You saw it pushing Jalen Hurts across for first downs and touchdowns all day,
literally,
as well as a great defense. Yeah. But I have to bemoan my unfortunate bet, Marc. It was my parlay. So here was my parlay, folks. And I put it out on Twitter before the game so that nobody could question it and say, oh, yeah, well, in hindsight, I could have told you that Tesla was going up or that Facebook Meta was going down or whatever. So I wanted to put it out before the game. And here was the bet. It was a parlay bet that was number one, Travis Kelce had to score, the tight end, of course, for Kansas City, had to score the first touchdown for Kansas City. Not the first touchdown in the game, first touchdown for Kansas City. He did that. He had to get receiving yards of over 70. He did that. By the early part of the fourth quarter, he had 80 yards. The third part of it was that he had to have 7 catches. And if he did, I was going to get a 6-1 payout on my parlay bet. And he had 6 catches going into that drive when Patrick Mahomes always finds Travis Kelce with at least one pass because he always finds a way to break free. He all of a sudden stops, and as soon as he turns his shoulders back, he gets hit with the ball right there. So I'm laughing. I'm figuring this is free money. I was ready to cash the check, Mark, and it would have been not a 6-figure, but a 5-figure check.
Oof.
But instead, Mahomes did what only Mahomes can do, and that is, with the pocket collapsing, he broke free and ran for about 35 yards. And it crushed me because it meant he wasn't going to throw the ball to Travis Kelce. And I was sitting there, I need one catch, and he's not going to throw it because they're going to run the clock all the way. Oh, no. But that's why those parlay bets are those great odds, but rarely pay off.
It was, you know what, John? It was also a great example, I think, on the Chiefs' part of strategy, right? Going for the conversion, running down the clock. It was just, and it was for the unindoctrinated in football. I found myself explaining a lot of some of what was going on to family members. Why aren't they going for that touchdown? What's with the stopping short of the 2-yard line? What's happening here? But really, just an absolutely terrific demonstration in a playoff, in a championship game from the Chiefs of strategy and how to win a game and to make it impossible for Philadelphia to recover.
Yep. It was great. I mean, it's why I guess Andy Reid is, one of the GOATs when it comes to coaching,
right?
Because that was a very disciplined player that stopped short of the goal line. And obviously they must have preached to those guys, look, we don't want to give them the ball back with any time. We're already in striking distance to win this game. We just have to run out the clock. And, hats off to them, even though it meant that I didn't get my big bet cashed, Mark.
and somebody went home without a Super Bowl touchdown. I mean, the discipline for that player, I don't remember who it was on that play, but my God, because the temptation just to go right into the end zone and take home a Super Bowl, the touchdown, that had to be very, very hard.
Yep, absolutely. Well, folks, we appreciate you joining us. This has been the Rebel Edge number 112, episode number 112. Pete should be back tomorrow, but if he is not, well, that guy, Marc LoPresti, who always does a fabulous job on his insights into both unusual activity and the markets, will be back if Pete can't be back. By the way, Pete was at a funeral today, folks, and it's so damn cold up in Minnesota, I think, Mark, that they couldn't bury the guy a few weeks ago or something like that. I don't mean to chuckle, but it's just kind of, that's why I don't live there anymore.
Oh, man. Yeah. Well, whenever you or Pete can't make it, the viewers know I'm more than happy to jump in and guest host. And I think with you back on the road in a couple of days, that might just happen. You might see me and Pete in a later Rebel's Edge episode later on this week or the beginning of next. I hope I'll get pulled on.
Oh, you will. Thank you for joining us, folks. I'll be back with 3 at 3 later today.